What's going on, mother truckers? Welcome to the Asian Mice Show. We're out here, South Florida, at the Mecca Chrome Shop at the 595. For the people that are jumping on, watching this on the replay, we just want to make it smooth and easy for y'all. For the ones that are live now, we appreciate y'all as well. But we want to get through what David wants to talk about before we start answering questions. And so, yeah, I just want to introduce to the show, David. How are you doing, sir?
I'm doing good, Alex. How about yourself?
I'm doing great, man. It's such a blessing to have you on the show. You know, I appreciate you so much, brother, because I know you must be busy as heck right now. What's the deadline for taxes?
It's April the 18th this year. It's not the 15th. It's the 18th.
So, see, those little things, David, only you would know, because there's little rules that always change, but most people wouldn't know unless they really knew trucking. And I just want to start that off for people that don't know. David has over 20 years as a CPA in the trucking industry. So we're not talking I'm not trying to throw shade at H&R Block, but they don't understand trucking, right?
Well, I hate to criticize competitors, but H&R Block is really good at doing simple taxes fast. Let's put it that way. They can do simple taxes fast. If you get a person who's been there 25 years and they've worked hard, invested in themselves to be a good tax preparer, then you'll get that. If you get somebody who's been there for 3 weeks, you'll get that. And that's the difference. There are a few seasoned people out there in this kind of places, but
No, I appreciate that. So, I just want to show your expertise just a little bit so people know that, hey, first off, we're not telling you to use David. This is not a commercial. David is actually a personal friend of mine. And so we're here just to give you information. Now, if you feel like David might be the one for you, that's good. Give him a call on your own. This is not a sponsored video. I don't make money off of this. We're just here to just share information like always. So, the first question in hand, David, is taxes a big issue for truck drivers in the industry?
Well, taxes are a big issue with a truck driver. With an owner operator, you may gross $150,000 or $200,000. And if someone gives you a 1099, they send that to the IRS. All the IRS knows is you made $200,000. So you got to be able to file that because they've got that. They don't know how much you spent. That's why you file your tax return to say, but I spent 60 or 70 in fuel. I was out 200 nights at $69 a night per diem. I got $1,000 a month insurance, $550 a year, $22.90 tax. I got IFTA tax. I got KYU tax, and it goes on. That's why you have to track those things to file to then say, well, I got a 1099 for 200,000, 175, whatever it is. I really only made 50 or 60 or 40 or 80 or whatever you're lucky enough to make. Plus, did I forget? You have a semi truck that could cost anywhere from $3,000. I've seen people spend $3,000 on a truck. I've seen people that spend $179 on a truck, $169. And how do you write that off? And how does that figure into reducing that 1099 down to what you're only legally obligated to pay tax on? And so that's why it's a big deal.
No, I hear you. And for a lot of us that are going to be watching this now and on the replay, a lot of what you just said scared the heck out of us, right? So we might not know. So, this video, I don't want to make it towards the owner-operator side, but I think owner-operators would need your help a little bit more than company drivers. Would you say that's correct?
Oh, absolutely. Well, the company driver, I mean, you have a W-2 and you can't claim per diem on your itemized deductions anymore from a few years ago. And those guys, everybody deserves good tax help once a year. And company drivers need that. But the owner operators are the ones who need to find someone who specifically understands the trucking industry.
Gotcha. And, just to circle back real quick, for all you company drivers out there, the rules change, it sounds like. No per diem, huh?
That section of the itemized deductions was there's no deduction for that section anymore. It's per diem. It's employee unreimbursed employee business expense. I couldn't think of the name of it for a minute, Alex. Sorry. But
No, you're good.
when President Trump took office, had a Republican Congress, they updated the tax laws, and most everybody saved money on their taxes. And I see that, I saw that, and I know that. Regardless of politics, I'm not saying it was a good thing or a bad thing, but union workers who drove their vehicles a lot to get to work could no longer deduct their mileage, and truckers could no longer deduct per diem. So those people lost a lot. There were sections that lost a lot, and that's just the black and white fact of it. About whether I think it was good or bad to raise the lower taxes, that's what happened. The owner operators still can deduct per diem because it's a business expense. They don't get a W-2, so that did not affect them at all.
Gotcha. So for anyone that's jumping on here, company drivers, you don't get per diem. Owner operators, you do. So, as far as company drivers, you guys are pretty much set to go. You got a W-2, take it to where you need to go. So today we're going to focus more on the owner operator side. Let's go through some of the basics. So just say I'm a fresh, brand new owner operator. What are the steps? What do you recommend I do so I do not get in trouble with the IRS?
Well, good. I think the first thing is you got to keep track of things. So that can be easier or harder depending on you and your situation. But if you are swiping, if you're leased on to somebody, you don't have your own authority, you're leased on, you're swiping their card for all your fuel. Okay, well, you get a settlement sheet every week. That ought to tell you how much they took out of your check, your settlement check for fuel. So fuel should be tracked that way. If you, for whatever reason, pay cash for fuel where you don't use that card, you'd have to keep track of that in addition to that. Otherwise, you'll lose track of it. So some of your record keeping gets easy if it runs through the card. If your company repairs your truck and takes it out of your check, then that'll be on your settlement sheet. At the end of the year, you might get a year-to-date settlement sheet to track all those deductions, all the expenses that went through them. So if you don't do that, or if you have a lot of things that don't go through that company, you got to keep track of those, or you're just naturally going to lose a piece of paper. You'll lose a receipt. You'll forget you did something. You'll think there's no way I could forget that I just spent this money on this expense. But you do, and I know that for a fact because I own a business too, and there's times I look back and I think I don't remember doing that. Or I'll remember after the fact that I did something, but I can't find it. Maybe I paid cash for something because I was out somewhere, or used my wife's credit card. Hope she's not listening.
Right.
But, and then if I don't grab that piece of paper and put it in my accounting system, I'll lose that. So stay out of trouble with the IRS means a couple of things. One, don't pay too much tax. That's the worst trouble. Two, it means pay your tax when you're supposed to. But if you file a return and you owe money and don't pay it, they'll work with you. And number three, of course, obviously never lie to them. Lying to the IRS is a pretty bad thing. I won't do it myself. If someone asks me to do it, I just don't do it. I got to sign my name at the bottom, and I won't do that.
Are you serious about that now, David? You actually will have. We won't disclose names, but you'll actually have owner operators pretty much say it without saying it. Hey, can you mix with numbers a little bit for me? I mean, that does happen in the game.
Well, not just owner operators, but everybody. So if someone, it's a little less with owner operators because if their expenses are being tracked by a company, it's kind of harder to do. You can't cheat on your revenue because you got a 1099, but you have other people in other industries that do it more than owner operators actually. But it does happen. It happens.
I can imagine. I can imagine that. So for all you owner operators listening right now that just jumped on, we're here with David, 20 plus years CPA. Now, the first tip that he gave us is basically keep track of how much fuel you're putting in that truck. If you're leased onto someone, you're able to contact with them, if they gave you a credit card for that. If not, it sounds like, would you recommend definitely have a credit card or some source that you're just keeping track just for fuel by itself? That way you have records. It makes it easy, right?
Yeah, if you have your own authority or for whatever reason the people you're leased on to don't give you their data card or whatever the card is people mostly use today, I would use a credit card, and I would keep my credit card statements, and it'll show all your fuel, and you can easily add it up. That doesn't mean you're not required to keep your receipts, because if you get audited, they'll say, well, thank you for showing me the credit card statement. Thank you for showing me where your numbers came from. Now I need to see all the receipts. How do I know that didn't go in your personal car, your wife's car? And so if you have a receipt from a city far away from where you live for diesel, hundreds of gallons of diesel, whatever those tanks hold, it begins to prove that it was diesel for a semi truck in a certain location that might match up with your logbook. So they
No, I
still
got you.
ask you for your receipt. You have to keep them. The credit card is the statement is probably the best way to have everything in one spot on a few pieces of paper, 2 or 3 or 4 pieces of paper a month or whatever, however big your credit card statement is. That's the best way for you to track it and give it to me to do your taxes. But don't forget to keep your receipts.
Gotcha. Any other big expense besides fuel that us owner operators should be keeping track of?
Well, obviously repair and maintenance, and I hate to say this, but if you spend $10 on wiper fluid, that's not a lot. But if you're not in the habit of keeping the small receipts, I'm afraid you're losing bigger receipts too. So
Mm.
all your maintenance, all your chrome, I said that because you've asked me before about chrome. And within reason, if we're not spending tens of thousands of dollars on chrome, that stuff goes onto your truck. And someday if you sell your truck, it increases the value of it. All those kind of receipts. Don't forget all your whatever taxes that you pay, like IFTA, your KYU, New Mexico, New York, and your 2290 taxes, all your insurance. I had a guy a while back. He said, "Well, I just can't find the first 3 months of the year for my insurance." And one of those months, he put a bigger down payment down, and he was out $5,000 in expenses. I said, "Well, you need to stop this process right now. Go call your insurance agent." I think it was a Saturday. Call him Monday. Have him send you your paperwork. Send it to me. I didn't want to lose a $5,000 deduction. Maybe it was $3,000 the first month and $1,000 for a couple more months. And so those were, I can't possibly name everything, but per diem is one people forget. I ask people how much they had out, how many nights they had out. They don't always remember. They don't keep track of that very well. Then they estimate, and maybe they're close. But if you get audited, you have to have something better than a guess. So per diem is a big thing. If you have $69 a day at 200 nights a year, that's almost $14,000 in per diem that you need to track.
And then someone asked a question, or not asked a question, but Michael says, track your deadhead miles you can deduct based on the annual rate. Is that true or not true?
Trucker deadhead miles you can deduct based on the annual rate.
Yeah, track your deadhead miles you can deduct based on the annual rate.
Well, if you're deadheading, you put fuel in the truck, you drove the truck, you're deducting all the fuel that goes in the truck. We're just deducting the fuel that goes in the truck. There's no special rate for those miles. So if he's referring to the number of miles he drives, and that's a separate deduction, the answer is no.
Gotcha.
There are tax repairs that will say, well, you drove, how many miles a week can you guys drive now, Alex? Can you drive 3,000 miles a week?
Yeah, some guys can, but let's use that as a number.
2,000 miles a week, 50 weeks a year is 100,000 miles. And then they try to do the standard mileage rate. If that's what he meant, there are people who do that. It's absolutely ridiculous and wrong and crazy. Not to criticize the guy that wrote in, but wherever he heard that, he heard that somewhere, and that is wrong. You do not deduct standard mileage rate on semi trucks unless you get a certain tax return prepares. And I don't know how they've missed that. I don't know why they do that, but they do.
Okay. No. And and that's the thing. A lot of truck drivers, we hear a lot of things, and then we think of them as golden rules. So that's why it's good that we have you here. No disrespect, Michael. David means very well. But that was I think that was something great to bring up. Now, besides keeping track of your maintenance records and keeping track of your fuel, and basically owner operators out there, you just got to find a system to keep track of everything that you're swiping, because someone like David, he's going to ask you at the end of the year or what have you for your taxes, and he's going to need receipts for everything. Is that correct?
So I don't need to see your receipts, but you have to have a way of telling me the total fuel, total insurance, total nights out, total repair, maintenance, tires, oil change, all that stuff. You have to be able to tell me those totals or send me the receipts, and then I add them up for you. Of course, that slows us down and it costs more money. I don't
Yeah.
mind doing it. But if you can total all that up, that's great. What we use is I call it a deduction worksheet, and I probably should show it to you sometime, Alex. Maybe you could, trying to advertise anything, but it's on my website at truckerstackreturns.com. They can print it out, use it for free, go to their CPA if they go somewhere. That helps you organize all your expenses. That doesn't mean my list has every conceivable possible deduction listed on it. It just has the ones we use 99.9% of the time. But you need something to remind you what you can deduct and cannot deduct, and go by that. I'm not the only.
Gotcha. So, as a new owner operator, besides keeping all your ducks in rows with all your receipts and all of that for all the things that we just talked about, now you're buying your first truck. How's the setup? Do you go, people hear S Corp, people hear C Corp, people hear LLC. I'm just throwing all these things that truckers hear. What do they mean on the basic level? And what would your recommendation be for a single owner operator that's brand new, that's going from company driver and now he's an owner operator and he needs to make sure that this is just right?
And I do notice that younger drivers, people who are new at the owner operator aspect of it, seem to be more in tune with the fact they need to do something, and they are a little bit more careful. And if they start off that way, they'll do better going forward. So I can't give legal advice. It's against the law, I'm sure, somewhere. But the lawyers I talk to love LLCs, and for someone to be driving down the road and not have the protection of an LLC or a corporation, I think that's just almost that's just asking for it. You get your truck in your name, and you've got your personal home in your name. You get your kids' college savings account in your name, and it's all in your name. You crash that truck, hurt somebody, or they just hit you and say it's your fault. It's tied to your personal life, your personal assets. So I heard a lawyer in Virginia one time say at a conference, I think it was a NASTIC conference down in Nashville. He said, if you're here right now and you have a truck, it's in your personal name, stand up, walk out, get in your car, drive back home, be at your lawyer's office 8 a.m. Monday morning and get it out of your name. He didn't want anybody to have a truck in their name. That's legal protection. That's for your lawyer and your insurance agent to help you with. Now, once you get an LLC, LLCs can be taxed 4 different ways: sole proprietor, partnership, S corporation, C corporation. Now you're talking about tax, and I help you decide the best tax implications for you, the best tax strategy for you. Generally, the S corporation has a chance of saving you money, whereas the sole proprietorship doesn't, because you pay too much in Social Security and Medicare tax. So an S corp, you can carve some of the money out and say it was the net income, the net profit, the money that you made that you didn't pay yourself, and it's not subject to a 15.3% Social Security and Medicare tax. If you can save $20,000 off to the side that you don't pay yourself as a paycheck, at 15%, that's $3,000 a year of tax that you can save.
Right. Wow. So hypothetically, David, if you were to start with one truck yourself as owner operator, your recommendation or what you would do for yourself personally is you would go out and get an S corp?
Yeah, well, to be specific, I would go out and get an LLC with my local attorney close to me, or you can go to LegalZoom.com or attorneys online. But I would get an LLC in my state, where everybody asks me about Nevada and Wyoming, Florida, Texas, getting LLCs there, whatever. Settle that with your attorney. Most likely you want an LLC and not a corporation. A corporation has more maintenance and legal work to do to create it and keep it going legally. LLCs are streamlined and easier and probably offer the same legal protection. Then I would file with the Internal Revenue Service to get my S Corp status. And we've done a few of those this week even. So I would do an LLC, and then I would call the accountant and have him do the S Corp status for me.
Gotcha. No, I appreciate that. When people start thinking about C Corp, is that when you have more than a few trucks and some employees? When do people think about doing that?
Well, I think a C Corp has less to do with how many trucks you have. It has more to do with the tax structure overall. And there are things you can do in a C Corp you can't do in an S Corp. And I don't want to be careful here because it's been a while since I've dealt with a C Corp. I don't see many of them. But you can deduct, I think, some of your long-term care insurance. Maybe your health insurance is fully deductible versus an S Corp it's not. But there's other ways to accomplish that in an S Corp. I don't think it's size. I think it's certain tax benefits. And I think the number of people that benefits are small. I think most people, if I recommend an S Corp to everybody, I'm probably going to be right almost all the time.
I like that. So we'll leave it at that. Just to keep it simple for y'all, mother truckers out there, if you're a new owner operator or you've been an owner operator for a while, hey, David's 20-year CPA, LLC, S Corp is what he would do himself. So we're not telling you to do that. But all I got to say is that's how mine is set up. So that's all I got to say. So mother truckers, just look into LLC and S Corp. Again, David's just here just to give free advice. Besides, if you guys missed it, and you'll see this on the replay, keeping up all your receipts for basically fuel, maintenance, per diems, everything that you're doing, and you got the LLC and S Corp. What else would you recommend for the new owner operator or an owner operator that you've seen has some issues and you're like, man, they really should have taken care of this or done this? What would be the next step?
Well, I think we covered a lot of it from the accountant perspective, from the business perspective. So if you're getting into this on a lease purchase, let's talk about that.
There's a lot of lease purchase people. So, I'll stop you just for a second. Mother truckers, if you're in a lease purchase deal, which a lot of you are, listen up. That's all I have to say, and I'm just saying this as well so that when I edit and cut this later, I could make this version easier. So for the lease purchase, how are we doing our taxes, David?
So on a lease purchase, it's not bad. It's not the best thing. The best thing would be to pay cash for a truck. Okay, so you can't do that most of the time. The next best, borrow money from a bank and buy one at a favorable rate of interest. Some people can't do that, so they take a lease purchase. You're guaranteed to get the truck. You're borrowing the money from the person who owns it. They're selling it to you on time at a higher rate of interest, maybe 10%. And sometimes that person will say, well, all you're allowed to do is deduct rent, just deduct the lease payment, which is not what the IRS requires. You borrowed money, you bought a truck. You happen to have borrowed the money from the same guy that sold it to you. You're paying him interest, but you borrowed money and you went out and bought a truck. That's the fact of it. We depreciate that truck over 3 years as the IRS requires. If that guy is also still depreciating that truck, that's on him. He did the wrong thing. They'll put pressure on you to do that. They'll make you sign something that says you won't depreciate it, but I've never heard of one of those people going back and actually asking to see your tax return to see what you did or didn't do. And I doubt you're required to show that to them, and I wouldn't show it to them. If they do the wrong thing, that's on them. Let it be their problem. So lease purchase, you bought a truck. Some people say it's better to do the rent or the monthly payment. You get more deduction. That's not true. You get the same deduction either way. If you buy a $50,000 truck and you pay back $70,000, what I'm going to do is write off $50,000 for the purchase of the truck through depreciation. And as you pay the interest, I'll write off the other $20,000. You get 70 written off. And so I guess an easier example would have been $1,000 a month, 60 months. For a $40,000 truck, you pay 20 in interest. You pay $1,000 a month for 60 months. If I deduct $1,000 a month for 60 months rent, at the end of that period of time, I still wrote off the exact same amount. I just didn't really do it the way the IRS requires. And I don't think it benefits you to do that. It does make it even and it smooths it out so it's the same every month, every year. But again, that first year, you may need some extra help or extra write-offs. Maybe put some extra money in the truck and just getting started. And that's when I can depreciate more of the truck for you. On that first year, on year number 1, you can deduct more. So it's required to depreciate it. and doesn't hurt you, sometimes benefits you. You just have to understand that third and fourth year, you don't get very much depreciation. So lease purchase, I think, is a good, if that gets you started, it helps you get going where you can get your next truck maybe on a bank loan. It helps you get your career started. So what if you pay a little bit too much interest? I'm okay with that. We're writing it off anyway. But if you love it and you want to do it, it's better to do that than not to do it and stand around and worrying about the fact you paid 10% interest instead of 4.8 or 6.3 or whatever. If you got those lease agreements, will tell me what you paid for it, the principal cost of it, and the interest, and I break that out. If I get them from people, I break that out and deduct both.
Okay, no, so people are always under the perception that, oh, it's better for me to lease a truck than to buy it, because when I lease it, I could write off the depreciation, and and that's a plus versus buying it straight out. I hear these things. Do you hear that a lot as well?
I hear a lot of confusion on the whole issue. So depreciation is real simple. Whatever the truck cost you, you write it off. We say 3 years, but Congress wrote the rules, so it takes 4 years to do 3 years of depreciation. Call your congressman about that one. I don't understand that. But you depreciate it. So if you pay cash for one, I depreciate it. If you buy a truck on New Year's Eve, it's delivered to you, ready to roll. Maybe you haven't used it for one load yet. You haven't made any payments on it. You made no down payment. I can write the whole truck off that year. You made not any payment on it. You didn't drive it once. The rule is it's placed in service. And so if you sign on December 30th, 31st, you sign your lease agreement, you've got the truck, it's at the house, ready to roll. 3 days later on January 2nd or 3rd, whenever you take off again, then you can write that off that year. All of it, by the way.
Wow.
Or you can only write off a very small amount of it. You have a little bit of flexibility there that first year. But whether you pay cash or finance it, make a payment or don't make a payment, you bought a truck, period. You borrowed the money, you paid for a truck. The fact you owe somebody money and the truck is a collateral doesn't change the fact that you bought a truck.
Gotcha. No, I appreciate that. Let's get into some of the fun stuff. From your 20 years, what are some of the questions that you hear a lot? Because we talked off camera, and again, there's no names to this, so we'll just say the people's name. Everyone's name is James or something like that. Just say, James calls you and say, "Hey, David, I have not paid taxes for since 2002." Right? What happens in that situation, honestly? Like, does that person just get locked up forever, or what's the situation with someone that, and mother truckers, you do not have to answer this, but listen up if you haven't paid taxes for a few years, right? And have you gotten a lot of that question?
But yeah, I had a guy call, I think it was last month, and he hadn't filed his return since 2007.
Whoa.
What happens there? So first of all, nothing's happened yet, or maybe they have contacted him. Each person responds differently, and worry and stress and anxiety in life can be worse than the actual problem. And I'm going to say this not to encourage anyone to do the wrong thing. I don't mean illegal, but I just mean I'm not encouraging you not to file. But sometimes the problem is so big, so out of control, that the answer becomes very simple. You owe so much money for so many years, you can never pay it off. And they can only take what they can take. They can't take your name, your birthday. If they put you in jail, you're not working to pay them back. And so in general, and this is not exactly right because there's some details that go along with this, but in general, there's a 10-year window that they can chase you for most. I'm saying the word general and I'm saying the word most because there's some scenario out there that there's something different. But at the end of that 10 years, generally it falls off and goes away. For that 10 years, I suppose you might worry about it quite a bit, but you can go on a payment plan. You can tell them I make this much money, I spend this much on business expenses, I spend this much on my home, my personal vehicle, my utilities, food for my wife, my kids, etc., and so on. then there's a number at the bottom of that. They'll take all that money. If that's $500 a month or $2,500 a month or anything in between, they have the right to take that. But there's a limit. They generally can't just put you in jail. If you tell the truth on your return,
Mm-hmm.
and you just call them and say, I can't pay this, this is what I owe, generally they're going to help you find a way to get them all the money they can get from you. And then some people actually do what's called an offer in compromise, where you offer them as much money as you can to knock off the rest. Sometimes those work, sometimes they don't. If you're toward the end of your 10-year period, they're more likely to take whatever they can get from you, because they know that 10-year period is going to come to an end. They'll get nothing more. And so there's a lot of different factors. You can watch the advertisements on television, and they say things that are right, but they don't necessarily fit you all the time. And so it requires some work to determine. I guess the first thing to say is just don't do it.
I heard that.
Pay your taxes.
And I was just asking that one for a friend, you know. That's all I'm saying, David. I was just asking that one for a friend. So just say I have a friend that didn't pay their taxes for 9.5 years. It sounds like, in general, just lay low for a half more months and.
That's okay. You're asking for a friend. I get it now. I'm slow humor. But that 10-year window starts after you file your return. You're laughing. After you file the return, after they assess the tax, then you start your 10 years. So this guy, if he files his 2007 return now, this is 2022, it could be 2032. Still talking about 2007, 8, 9, 10, 11, 12, and so on. So that 10-year window starts after they assess, which could be years after you actually file.
No, I love that. No, I love that. And I'm just teasing, guys. So, you know, we're just opening that up for people. David, any other questions that people are usually calling and freaking out about as far as owner operators calling you?
Well, they're worried about deadlines. They're worried about when to file, when to pay. S Corp deadlines are March 15th. Unless you file an extension, it's September 15th. Partnerships are March 15th. Then we just filed a bunch of extensions. It's September 15th. This year, April the 15th falls on April the 18th because I think there's a holiday on, I think the 15th is a Friday. That's Emancipation Day in Washington, D.C. only. The IRS is closed. 16th is a Saturday. The close on Saturday and Sunday, so the 18th is the deadline. You can extend the period of time to file your personal return 6 months. So if you do October the 15th, what people get confused on is you cannot extend the time to pay your tax. You can extend the time to file. It's a breeze. You tell me, you tell your CPA, whoever does it, H&R Block can even do it, and you can get an extension real easy. But if you owe money, if you file your return in September or October and you owe $5,000, that was due April the 15th. This year it's April the 18th. Let's just say April the 15th, not to get confused. That was due then. And when you pay it late, you get penalized for paying late. And so they do get confused on the filing deadline, the paying deadline, and they are two different animals. You can extend, you cannot extend the other. And yet, if you file your taxes on April the 15th, you have 3, 4, whatever it is, $5,000. I'm just making numbers up. And you just absolutely cannot pay that money that day. You got two choices. You can ruin your week worrying about it, or you can say, I've got a problem and I got to find a solution. And part of that solution is to forget about it for now and go truck, make some money, help give my CPA what he needs to help me. Maybe just go online, do it yourself, and get a payment plan. Maybe have the CPA help you with it. Or maybe you write a letter to them and say, I'm going to send you your $5,000 in 2 months, and get it addressed. But again, I'm a business person too. I've had IRS problems myself. There's been, in the beginning, there was just times it was rough. And it can make you worry. But the main thing is, don't worry, just address the problem.
No, I appreciate that. I appreciate that. You know, real quick, let me see. Jay Freeman, yeah, I will repost this. Don't worry about it. I'll make sure I do that for you. And then to Dewan 301, thanks for the information. Are there any books on tax assistance for truckers? Anything a good read for truckers that they could read on themselves?
I don't. I'm sure there's something out there, but I don't know of anything.
Yeah, just call David. It sounds like, and you'll give them a free consultation and just talk them through it and get their nerves down, right?
Yeah, the main thing is you can read a book and you can spend 8 hours reading a book, maybe half hour of it applied to you if you're in a jam or something. I think the best thing to do is get a human being between. If you have an IRS problem, get somebody like me in between you and the IRS. Because when the IRS talks rough with me, I just smile. I just, if they're in person, I just kind of smile and look at them. It's not my money. You can talk however you want to talk. It's not my money. I'm not going to get nervous. I'm not going to tell you anything. I'm not going to slip up. I'm not going to flub up and give something away. I'm not going to lie either, but I'm not going to get rattled. You need somebody between you and them, and you can read a book, but you're still talking about doing it yourself.
Gotcha.
It's
No,
about
I hear you.
you need to
You
know
know,
CPA to be able to help you know those things. I have a piece of paper I give people, tell them to fill it out. They get 95% of it on there, but some of the questions they answer help me figure out that I need to ask something else or something oddball or off the wall. And get that experience and they help working for you. There's nothing wrong with reading. If you can find a book, read it. But I'm not sure that's
gotcha.
the way to get your taxes taken care of.
No, I hear you. So at the end of this, let's start answering a couple questions on here because I know there are people asking some questions, and you guys can go to. I have it pinned on the top of the comments so people can see it. Truckerstaxreturns.com. Do I got that right, David?
Say it again, please.
Truckerstaxreturns.com.
Yes, sir.
So you guys could jump on there, talk to David if you want. He's a really chill guy. He's just a friend. But let's answer some of these questions. Mother Truckers, if you have any questions, please answer them or comment them down below right now. I know you guys have been commenting. I apologize for that. But comment that down below now, and then I will have David read off some, and so we can help you out right now. Burn LOL or Bernal, any cons of using Section 179 on new trucks?
Any cons?
Yep. What is Section 179 for people real quick so that, let's let the world know.
Well, there is Section 179 of the IRS, of the Internal Revenue Code, that can allow you to write off a big piece of a new truck, I think new or used, up front. That's what we always did in the past. And then along came something called bonus depreciation that you can use too. And I think there are times when one could be better or worse or more favorable. I tend to do the bonus depreciation because there are some extra rules on the 179 that I think don't apply to bonus. I think bonus depreciation is only for new stuff, not used, if I'm saying that.
Yeah,
So,
and this is for a new truck, so.
huh?
And this was for Section 179 on a new truck, so.
Well, I mean, the other thing is you can write so much off that, let's say you're in the 22% tax bracket and you're writing off money, then you're down to 12% bracket, and you write off some more, you're down to 10% bracket. And so you have this thing called diminishing returns. If you're writing off a big chunk of your truck this year and you're saving money at 10%, for every $1,000 you write off, you saved $100. Maybe you need that same $1,000 next year, and you're back up in the 22% bracket. And so it becomes a timing issue. Some people will want more write-off now, not understanding they're actually losing money doing that.
Wow.
All that out, then you need it next year when you're back up, say in the 22% bracket. And keep in mind on a Schedule C, the sole proprietor, not an S corp, just sole proprietor. Let's say you're paying 12% tax and you're paying your 15% Social Security tax, you're at 27% if you're in the 12% bracket. So if you can write off money at 27%, I'm kind of all for that. If you get down to where you've written off all your income for the year, you're out of your 15% money, you're down to 10% bracket, you're writing off a big chunk at 10 when you could have saved it next year for 27. I think that speaks for itself. So there is a con, but Then you're getting the tax plan. You're looking at this year, guessing what next year is. It may not be much of a guess. It might be easy to see. If I'm doing someone's return in July or August, half the year is already over. I kind of already know what the next year is going to be like, and I have the idea of what I should or shouldn't do that previous year. If I'm doing your return in early February, I know less, and so do you, about the next year. But there's one con that sometimes people don't understand. Why didn't you write it all off? Well, because I just saved you $100 when next year you could have saved $270.
Hmm. Well, I hear you. No, I appreciate that. Hopefully, Bernal, it helps a little bit. We got Vic Med. He's a YouTuber himself, a great guy, owns a fleet of trucks. And so I know him personally. He asked, is QuickBooks the best way to keep track of all of his expenses for his company?
That's what I use. So being straight honest with you, Alex. How many trucks does he have? I mean, ballpark, if you're allowed to tell me.
We'll just say he has 10.
10? Yeah, at that point, you probably need some help and you need to do something like that. Here's what I'm going to say. If he's busy running a trucking company and then he's trying to do the QuickBooks too, it's really two different skill sets. It's two different energies. It's two different, you're splitting your mind in half. And what I find are that people that grow a little bit like that, they need the help, yes. Are they the one that should be doing QuickBooks? No. If they are, sometimes it can be so messed up that I can have a hard time making sense out of it. If the question is QuickBooks good? The answer is yes. If the question is, do a lot of truckers mess themselves up on QuickBooks? That answer is yes too. But generally, they got 1 or 2 or 3 trucks. They're trying to do everything, and they're not doing anything quite right. So if he's big enough to get some help, then yeah. But just
perfect.
I say, just because you have QuickBooks, and I'm not knocking them, just because you have a computerized accounting software doesn't mean it's coming out right. I see a lot.
Because I get what you're saying, and Vic, it's a family business, so I believe it possibly could be his. I'm just throwing words out there, Vic. So I apologize. It possibly could be, his wife or his manager that's doing the QuickBooks. That's accountant. I'm not quite sure, but I understand what you're saying. Of a lot of owner operators might have 5 or 6, 7 trucks, and they're trying to be the accountant while running a trucking business at the same time. And from your experience, you've noticed that that's could be a recipe for disaster.
Yeah, I hate to say that, but it's just a fact. I mean, when someone calls me and says, here's the login for my QuickBooks Online, I scanned everything in. All right, that's a nightmare because they're scanning things in just like the advertisement said, right? They believe QuickBooks is marketing. What QuickBooks doesn't tell them is, like anything else in life, you got to stand back, look at it, and be able to know if it was right or wrong. And so they're scanning receipts in, but they don't have the software set up right. It just does what you tell it. You put a receipt in. It could be a fuel receipt, but it's going somewhere else or whatever. So I'm just saying they don't, it's not as, it's quick, it's books, it's QuickBooks. But if you don't set it up right, if you don't know how to set it up and you start scanning stuff in, you'll give it to me at the end of the year. And I'll say, well, let's do an extension and we'll come back to it in July. And we're going to have to spend 20 hours trying to sort out what you've got going on here and pay me more to fix it, or pay somebody more to fix it than if you just would have paid them to do it in the first place. I'm not trying to knock it because I tell owner operator, here's what I tell them. You can pay me a bunch of money to do your bookkeeping. You can do your bookkeeping through QuickBooks, so you're spending all that money. Or you could buy a milk crate, so to speak, and the hanging files and put all your fuel receipts in a clasp envelope, clasp it down, add them up at the end of the year, handwrite the total on the back, take a picture of it, scan it to know how much fuel you had. That's bookkeeping. Bookkeeping can be put in paper receipts. And I know this isn't the trendy thing. Paper receipts in a folder, adding them up at the end of the year, getting a total, and telling your accountant what it is. If you're going to computerize it, you got to understand what you're doing.
Gotcha. And I think Vic has it. I know him personally, so, and that was a general statement. So Vic, you already know David's not talking about you, but I know Vic personally, and he has his stuff to a T. with his team over there. So that's perfect. But for most of y'all owner operators out there, don't try to be an accountant and a truck driver and own a company at the same time. It could be extremely difficult, and I think that's what, pretty much you're saying, David. So let's see. Can you write off the cost of paying a CPA on takes?
Of course. So if something's an ordinary or necessary business expense, you can write it off. So accounting and tax preparation is ordinary and necessary, and you have to do it. You can write off your CPA.
Perfect. No, thank you for that. Let's see. Hotshot Trucking LLC asks, will a picture of the pump, which includes metadata with time, date, and location, suffice when the pump is out of paper? That's an interesting one.
Yeah. If you're sitting across from an auditor who's got more common sense and they're not out to try to make you look bad, they might say, we're going to make an exception there. You get another auditor and they're having a really bad day and you've already upset them over something else. Maybe you snapped at them and they'll say, no, you can't deduct that. I mean, there's some subjectivity there based on the human being who's doing the audit who might think everything else you've done is clean. Here's an example of a problem. If I pump that fuel, I don't get that piece of paper. I'm taking a picture of it. I'm printing it off. I'm deducting it. If I get audited, I'm going to show it to them, and I'm going to argue with them to get that deduction. I can't say what they would do or wouldn't do.
I hear you. It's subjective of who's the one doing the auditing. So, no, I appreciate that. So it sounds like we got to yell at the truck stop to get that dang receipt. That'd be the better way with that. Let's see. Bernard Hoffman says, so what is it? Is it the 15th of March or the 15th of April where we have to have our returns in?
So 1040, Form 1040, which is the personal tax return that most everybody does eventually file, is due April the 15th. And that's when it's due. The March 15th is your S corporation and your partnerships. They're due then. So everybody that files an S corp return files a 1042. 1040s will do a month later. So those two returns are due March 15th to give you 30 days to get your 1040 done. That's why they're due ahead. C corporations are also due April 15th.
Gotcha.
S, March 15th. 1040 is the C corps, April 15th.
Gotcha. No, thanks. Dangerfield has a question, so when they're looking for a CPA, for one, how do you find a good CPA and what should the price be? Is $100 a month expensive? What services should they provide? So, if they're looking for someone like you, in trucking, I would say, what would that price be? That because, I'm sure it varies, right?
Well, I could tell you what I think and what I do, but I don't want to sound like I'm trying to advertise something. I would just say, for $100 a month, what are they doing? If all they're doing for $100 a month is adding up your receipts for you, and that's all they're doing, there's no tax advice, no tax planning, you're not getting any fancy reports, maybe $100 a month, can do something for you. We have done that before at $100 a month exactly. I try not to do that anymore because I find they always need, I'm doing this work. What are they going to do? They're going to say, well, am I okay on taxes? Well, then I'm going to do some tax estimating. When should I pay my money in? Now I'm going to print them off a voucher. How can I save money? Now we're doing tax planning. And so at $100 a month, I think you're not going to get very much of that or not very good quality of it. If all someone's doing is like adding your stuff up for $100 a month, that might be okay or a little on the low side, but that's possible.
I got you. So, without guys, again, David's not advertising. It's just, if you need information, he's here to help you. But let's just set the bar straight. What are your prices so that people can use that as a indication, right?
Sure. So I came up with something I call the Owner Operator Business Program, and I asked $500 a month for that. In there, you're an S corporation. I'm doing payroll for you every week. If you have one truck and you drive it, that's that fee. If you have 2 or 3 trucks, that may not go up because payroll is kind of payroll. It doesn't go up to get a lot of people. It could. And then you're sending me your weekly settlement checks. If you have your own authority, you send me your fuel card information where I can see how much money you factored, so how much money you made, and I can see your fuel because a lot of people factor. They got those two things there. You're faxing me receipts, or you're somehow summarizing some of it, or most likely sending it to me. And so I'm managing your payroll. I'm not just doing your payroll. I'm managing your payroll to save some money at the end of the year that you didn't pay yourself on payroll, so you can save money on your S corporation, the profit that we talked about 15 minutes ago. And then I'm trying to show you. I'm working on a project with QuickBooks, a software company in California, owned by a guy kind of like me. He's just an average guy, but he loves trucking and build a software package to get some reporting going on and maybe show you, well, your fuel this month was 30% of your revenue. This month it was 40. What happened? And you can say, well, I changed companies or I changed lanes. Apparently that lane wasn't very profitable. And we try to get some information like that. Estimate your taxes so you know what you're going to owe. And planning. Can you do something to save money? Can you go set up your own retirement account, your own health insurance account? So $500 is 5 times as much as your person wrote in about. But that's what I'm trying to do at that price point.
I hear you. So just say we throw that number, right? So for a year, for you do taxes for one, possibly up to a couple trucks, right? Is like $6,000 a year, right?
That's touching it 12 times a year. It's doing payroll 52 times a year and doing all that. And then generally, to put that in perspective, if a person calls me today and says, I want you to do my tax return, they summarize 85% of it. We help them with the other 15%. And I charge them $750 for the taxes at the end of the year. If you're a monthly client like that, at the end, I think I charge $250 to get that end of year return done because there is work for that. But there you have a $500 discount off the end of the year stuff. And then if you have an S corp, that's a fee for that. And if you have your own 1040 return, I try to charge as little as I can, the base fee of $150 or $200 or something like that.
Well, so it's not crazy. I mean, just say, okay, so just say $7,000, right? Or something like that, right? How much are you saving truck drivers at times, from them doing themselves versus you keeping track of it? I mean, it's not time to boast, but I mean, what's the big difference from having someone that has experience in the trucking world as a CPA versus me doing it myself on QuickBooks?
I don't know if you're paying me $6,000 a year. If my job is to go out and find that $6,000 and save it, I'm sure I can't always do that. I think the way I look at it is, if I save half that, and you're paying $3,000 a year, which is $250 a month, after I save you half of it, and you're never surprised by what you owe, you're always ready. You're not paying IRS penalties for paying late. Now there's a savings. It's hard to calculate because if you pay it on time, I don't know what it would have been. Stress reduction, anxiety, not having to do that work yourself so you can go out and focus on your company. What's that worth? I don't know what that's worth. So I'm not save every penny of that back. But again, if I identify a lane, help you identify a lane or a route that isn't working for you, I don't know how to quantify that. So you have to decide, do I need it or don't I? If you're a single guy and you really just don't want to do your bookkeeping and you're spending $200-300 a month after some savings to get me to do it, that could be what you want. Another guy has his wife at home, maybe has a part-time job, a new baby, and she is detail-oriented. She wants to do the bookkeeping. I tell people, that might be just perfect for you. And if your wife has a question, I'll talk to her about it. You have to weigh a lot of different factors. It isn't just money, how much you pay, how much you save.
Right.
Even what you save is easy to quantify.
Yeah, no, it's a lot of stress too. So I mean, at the end of the day, it's like a lot of people get nervous with IRS and taxes. So I mean, just knowing that you're going to be good, your company's going to be right. I mean, what's that worth to you, right? So I wouldn't want to say these words out of your mouth, but tell me if you agree or not. All you owner operators out there, if you're going to use a CPA, actually use a CPA that understands trucking and terminology in trucking. Don't use a CPA that doesn't understand trucking at all. Your thoughts?
Agree. That's yeah. So I got a call me from Jackson, Mississippi. I'm in Jackson, Ohio, and he's listening. I can't think of his name right now, and I wouldn't say it anyway. But hello. He called and we talked. He said, "Oh, you're in Jackson. Where?" I said, "Jackson, Ohio." He said, "Well, I saw the website and thought that was Jackson, Mississippi. I want a local person." I said, I get that a few times. There's a few other Jacksons out there across the country. And so we were talking that. He still asked some questions. He basically said he wasn't going to use me, but he wanted to ask some questions, and I was happy to talk to him. And you know what he told me? And I'm not criticizing him for sure, because I like doing business with humans, local, support the local business and all that. He said, "I don't think this person in this, where I am, understands trucking." And I think my honest response was, "Well, I'll send you my list of deductions that I use. You can take it and show it to him or her, and that'll help that person." But I wouldn't do that. I said, "You're going to walk in and see her. You're welcome to come and see me. You're probably never going to. We can talk on the phone and email. It's not the same as being across the desk with somebody, because that human-to-human connection does still
Right.
matter in the digital age." But he's saying, "I want to use her, not you," but I don't think she understands some of this stuff. The cost difference could be huge if she misses something. I've seen them deduct mileage, as we said at the beginning of the interview. They deduct the mileage and the mileage you drive. And if you get audited, if they do something wrong. But having said that, if she wants to work hard enough for that one client, she can learn about everything she needs. She might not be quite as good as I am, but I started somewhere too. I didn't know anything. I've told you before, I knew nothing. I got this salty, seasoned trucking veteran, and he came in my office one day and started talking, and I had no idea what he was talking about. But I went from there to here. So just saying, they can miss a few little things that can make a difference. And
I got that. No, I appreciate that. So mother truckers, you don't gotta use David, but use someone that understands some trucking, CPA. That's all I got to say. Again, real quick, deadline for sole proprietor.
April 18th.
Got it. Buying new truck will save me money filing taxes? Question mark.
You said buying a new truck?
Yep.
Yeah. I mean, if you have your truck is written off, completely written off, and you go buy a new truck, it's an easy question. I'll write off that truck or whatever I'm allowed to write off, and I'll give you a tax deduction. I'll give you good news, and I'll look good. Okay. But if you're way deep in debt on something that doesn't make any more money than the one you already had, you didn't save any money. You might have lost money. People, you make my job easier. So people say, "I can't use to save money on tax." Okay, go out and spend a whole bunch of money on a truck. Save you all the money you want to save. Buy a $179,000 Peterbilt and put a bunch of extra chrome on it. Make my job easy. Okay, if you can't go home and pay the house payment because of the debt payment on the new truck, I had a company a year ago. They had 3 trucks, and the total investment in all 3 trucks was less than $11,000. They were at $3,000 and $4,000 trucks, and they were generating $150 to $175 each in gross. And
wow.
They had a lot more repair, as you might imagine, but it wasn't terrible. And they worked on themselves to save the labor. $3,000 semi truck generating $150,000 or $175,000. You buy a $100,000 truck, are you going to generate more money? Now you may have better fuel economy and less repairs. But my goodness, what's your interest rate? So I'm just saying, yeah, you can save money on tax, but you may not save money.
Gotcha. No, I appreciate that. No, that's a good one. That's a good one. Can you create a second LLC, sell your truck to that LLC, and depreciate the truck again?
No. No. An LLC with one member is taxed as a sole proprietorship. If you have 2 sole member LLCs, if you write the truck off here and sell it to the other one. You've already written it off. It's still on your own personal tax return, so no, you can't do that.
Oh, perfect. No, thank you. Vic says thumbs up. Earlier, he says we don't scan bills. We just titled the expenses on QuickBooks.
So I'm assuming that means he's typing them in, which is what I do, because I don't scan them either, because I don't. If you're hand punching them in, you put them in the right spot. That's what I do and what I prefer to do myself. If you scan one in, you still got to go back and make sure it went to the right place. And maybe you scan it the same thing 100 times. It's always right. Maybe you can quit worrying about it. But I punch them in by hand myself.
Hey, that's perfect. That's perfect. Stavros says, "Hey, thanks for introducing us to David because I was looking for a trucker CPA." There you go, guys. Here's a trucker CPA. And here's a quick question: how much more expensive are you than H&R Block? To be honest, but having expertise in trucking.
Yeah. Well, let me say that when you walk in H&R Block and you say, how much will it cost to do my taxes? They don't know. When they do it, they charge you based on the number of forms that they have. And I'm guessing if I'm charging $750 for the van, and of course there's a lot of ladies that drive truck, but I guess I have a habit of saying that because most of them are men. But the one spouse drives a truck, have a trucking business. The other spouse works one job. They got 2 kids. I'm guessing they're charging no less than 350, 400. I'm guessing I'm double. But that's a guess because it's hard to know what they really charge. It depends on how many forms that you have. They charge more for some forms, less for others. And you know, Schedule C is a Schedule C. You can have 2 numbers on a Schedule C. You can have 20 numbers on a Schedule C.
Gotcha. So to get some expertise, guys, instead of paying 300 to 400, yeah, you might have to pay 700 to 800. All right. So I'm just letting you guys know. If you want things done right, it costs more. Here's a good question. Captain Cleaner says, "What is the income break-even point where one should look at an S corp where the tax savings covers the expense of setting it up and maintaining it?"
Yeah. Well, the legal expense of setting one up and maintaining it's kind of a one-time expense. The ongoing annual expense is this. If you're an S corp, you have to do payroll, and what does it cost to do payroll? And so if I'm charging just to do payroll, I charge $150 a month. That's one a week. Figure your taxes, take them out, send the money in, file the forms. $150 a month, $1,800 a year. Okay. So if you can save 20,000, if you can carve out 20 grand, that's profit. Let's say you make 70,000, you pay yourself 50. That $20,000 at 15% security and Medicare tax you're saving is 3 grand. So you just paid 1,800 to save 3,000. And you might say, is that worth it or not worth it? That's what you have to ask yourself. I think there's other reasons to do S corporations. But if you can make 70 and pay yourself 40, so you take 10 out per diem and 5 out in your own retirement plan for a SEP and SEP, and then you're down to paying yourself 35 or 40, and you've carved off 25 or 30 or 35,000. Now you've saved more. But I say about $50,000. About 50,000 is about where you'd want to be. If you're netting 35 or 40 grand, we can still do an S corp, and it might break even. It just
Gotcha.
less savings when you get below 40 or 50,000.
Gotcha. So 50 grand, people, about 50 grand.
Yeah.
And if you can't make 50 grand as an owner operator, I know it doesn't happen sometimes, but I think a lot of us are. So there should be no reason why any of us shouldn't be in an S corp. So, actually, I can probably answer this question because we talked about it earlier. Daniel asked, "Can they put you in jail if you don't pay back taxes and you are not driving anymore because of disability?" So you can answer that, David.
I'm not going to say they can't put you in jail for not paying your taxes. I'm going to say I've never seen it happen. They put you in jail when you get lying to them. I know a guy that owed him $1 million one time, and he did not go to jail. There was never any talk of jail, and that was well, I can't get into it, but that was $1 million.
Wow.
And there was never any talk of jail. There was never any badges being shown, no subpoenas. I'm not recommending you do that. Okay.
Gotcha.
Right. I think you go to jail if you lie to them.
So don't lie, people, and you won't go to jail. It sounds so. I'm sure, Daniel, you're not owing $1 million. So that guy, he didn't go to jail. So I think you're gonna be okay. Jay Freeman asks, or he says, I also was started my company in 2021 and was looking for a CPA. So all I'm saying, David, is if any of these people come your way, you better be extra nice to them. That's all I gotta say.
Yeah, I told my secretary she's working all weekend taking phone calls.
There it is. There it is.
On Sunday.
Oh man, another $500 that owner ops can't afford. So Christina says that a lot of us we don't have a lot of money right now. So what is the recommendation for a owner operator if they can't afford the $500 a month per se?
Spend about $10 on some clasp envelopes. With the kind you can clasp it down so it doesn't flap open. On the outside of it, write 2022 fuel and make January, and then put your fuel in there. And once a month, at the end of the month, you add that up on an adding machine. You write that on the outside of it, and you get one for February, March, and so on. At the end of the year, you add up 12 numbers, and you get your fuel for the year.
Got it. There it is.
No tax planning, not working for you. But if you just want to know how to collect the information to go get your taxes done so that you can give your CPA most of what he needs, your software program costs about $10.
Gotcha. I like that. So yeah, you can do it yourself.
Yeah, the question sometimes becomes, is it a cost or is it an investment? And I can't tell you that every single year for every single person they pay me, what do they pay me? They make dividends on it. You just don't know. But I think there's a reward to investing in a CPA. But if you can't afford that right now, here's what you do. You can get through it.
I got you. Tell me if you can answer this question. What's the downside of using cash, secured puts, and covered calls to earn a yield for repair bills?
Well, I guess the first downside is I've never seen that before. I don't understand that. So I've studied finance in the past. It's been a little while. Puts and calls to earn a yield for repair bills. If someone's got extra money and they're saying they can invest their money and make money on it and save that for repairs, that's fine. If you lose your investment, you can't fix your truck, you're done. I guess that would be the downside. But I'm not an expert on investments and things like that.
I hear that. Someone's actually, Tanny Logistics says, you can never overpay for a CPA. A brilliant CPA like David will save your company hell a lot and use all loopholes to make you more money, So there it is. There's people on your side.
Yeah. If you spend $6,000 on a CPA, you can write off 27% of it. You're off $2,000, or you're saving about a couple thousand in taxes, maybe. And I appreciate that. Thank you very much. Is that Tanny or Tanny? Tanny?
Yeah, Tanny, or is either Tany. So is Tani or Tanny. It might be Tani Logistics, but and then Dark Side that says he is saving them from jail time. So there you go. Oh man. Let me see. So, but on the flip side, Christina says she's an owner operator with one truck and trailer with good record keeping skills. So if you have good record keeping skills, then you're good to go. Then
Yeah, she's the one that mentioned a minute ago about the $500, I think. So yeah, if your goal is to go in your CPA in February or March, have it all ready to go, and he can do your taxes after the fact, and maybe you don't need tax planning, or you get, instead of you got money saved up to pay the taxes, and you get no anxiety over it. Yeah, I'm all for her. I tell people, I talk to them, and one person I'll say, I want $500 to do this, and they're saying, can I pay you today? And the next guy is like, well, no, man, I think I can do it myself. And it's just a personal decision. It's not right. Everything's not right for everybody.
I got you. No, and that's true. Grounding says, my best friend has been trucking for over 50 years and still owes in taxes. I hope everyone's listening. So it doesn't matter how many years you've been trucking. Taxes could be something stressful for all owner operators of all experience, right?
Taxes can be stressful for everybody, including CPAs.
I hear that. Uh, Let's see. Tiny Logistics says, please ask David what happens with brokers that didn't send 1099 even after asking and asking. You just calculate your income from them and match it to their EIN? Question mark.
I don't. I'm going to answer this question. I don't want to. There's something out there that I don't like saying it because I'm afraid somebody's going to go get in trouble. But I'm going to say the truth. If you get in trouble, it's your fault. You're not required to give 1099s to trucking companies. Period. Most people don't know that. But if you work for JB Hunt, they don't give you a 1099. You got to log on their website and get your annual. They'll give you your annual summarized annual income. But there was a court case, I think it was 1922 or 1912. I have to go look it up again. Nearly 100 years ago, you don't have to give 1099s to a trucking company. So, is that good practice? I don't know. It's not. It's the law. You're not required to.
No, I appreciate that.
Owner operator, you're working for somebody. I think I can't imagine a case where they're not required or shouldn't just be giving you what you ask for. I've got a guy right now, work for a company, a smaller company, maybe 30, 40, 50 truck company. I can't remember. He parted on bad terms. I don't know if it's his fault or their fault. Don't care. He's asking them, please show me how much you paid me, gross, and what you deducted in different deductions like fuel. And they won't do it. And I think they're required to. I think the law requires them to, but they're not required to give a 1099. And I'm not sure they're required to give you that or not. I think they are. And that would be getting into an area with a lawyer. But you don't have to find truckers for whatever reason. I don't know why.
No, I got you. No, I appreciate that. Thank you for that honesty. There's a thing that's going around now where there's a lot of companies that are paying their company drivers 1099.
I know.
Right. So they're asking, what all can I claim if I'm a 1099 company driver?
Well, here's what I do. I accept that at face value. You're a self-employed person. Did you pay anything expense-wise? They say, of course not. You don't own the truck, trailer. You don't pay the insurance. You don't buy the fuel. So I get down to saying, were you out overnight? Do you qualify for per diem? And they say yes if they're out overnight. And I deduct per diem for them. Obviously, it's illegal for those companies to give you a 1099 and not take tax out, and it costs you money because you're paying the employee and the employer's share of Social Security and Medicare. So whatever you're making, you're really making less than you think you are because they're getting out of paying that 7.65%, which is their half. They're getting out of unemployment. They're getting out of workers' comp. God forbid you have an accident and it goes back on them. They had no workers' comp. They could be bankrupt in Ohio. Ohio will bankrupt you for doing that because they'll send all your medical bills to that company. And so it's against federal law, state law. It's against unemployment law. It's against workers' comp law. They do it. You're right. That's what I will do on my end. But again, then you're backdooring per diems onto a tax return for a guy that really should have been a company driver. And what they would say half an hour ago, you don't qualify for per diem. I'm never sure if that got audited, if that per diem would sneak through there or not. A lot of IRS auditors, frankly, don't know a whole heck of a lot, and it might. I'm not sure that would be even legal. I do it because I'm accepting on face value that you're a business, even though you're not. And here's the expense. We do it.
I
All right.
might just make that clip into its own clip, David. So companies out there that are paying 1099 as a company driver, that is illegal.
Yeah, I'm not a lawyer, but yeah, I mean, if you read the IRS website, that's absolutely forbidden. States forbid it. Workers' comp forbids it, and probably most states. I can't be a workers' comp expert hardly in one state, let alone 50, but you're not allowed to do that. Now, to
God.
1099 somebody, and I've done it before for certain reasons, and I want to cover that person on workers' comp. So you can cover a 1099 person. The reason they're 1099 in them is to get out of the Social Security tax, Medicare tax, state unemployment, federal unemployment, and probably workers' comp. Who in the world? I'm sorry, I get a little bit riled up. Nobody would send a truck down the road without having insurance on it. How can you send a human being down the road without having insurance on a human being?
Ooh. So
Makes me
there
mad.
you go, mother truckers. And you don't mind me putting that in its own clip. I'm gonna put that up in a little bit itself, so that people just know that, hey, you don't have to say names, but if you're working for a company and you're a company driver and you're not getting paid a W-2 and you're getting paid a 1099, that is illegal. And the reasons why they're doing that is to save money on taxes from, you know, all the things you discussed. But that was crazy what you just said, that you wouldn't send a truck down the road without insurance. Say that one more time for me, David. That was crazy. That was
So I
crazy.
wouldn't send a truck down the road without insurance on the truck, but you're sending human beings down the road without insurance on that human being. So a client I had one time, his workers' comp lapsed in Ohio. He had no, so the guy got into a relatively minor accident. I think the initial bill to treat that driver was $34,000. Workers' comp said, "Don't worry," to the driver. They paid all of his medical bills. They paid him for his time off. Maybe he just broke his ankle, maybe broke his leg. I don't know. But he was off for a while and couldn't work, so they paid him. They looked at the employer and said, "You don't have to worry about it either. Just pay us our $34,000." Every time that guy went to a therapist or a doctor or got medicine for the rest of his life, workers' comp paid that doctor or that therapist or that pharmacy, sent the bill to the company whose workers' comp had lapsed. I worked for that company. I liked that guy a lot. I never judged him for it. I'm just explaining factually what can happen. And what, God forbid, I mean, a minor accident can cost $50,000. How can you imagine? What if somebody got killed? What if somebody rolled over and broke their back and they're paralyzed? They're 25 years old, now they're paralyzed 40, 50 years. You're never going to pay that back. You just bankrupted yourself, save a little bit of money in workers' comp.
Wow, that's
Well,
crazy.
they'll get taken,
So,
bankrupt the
so
company.
on a company level, right, David? So on a company level, if you own the company, that could bankrupt your company.
Yeah, man, you can fix the truck. I mean, what if you wreck a truck, you can replace a truck, or you can go to business, maybe start up again someday. If you hit somebody, I mean, would you take the chance of running a truck down the road that driver might hit another car, a family of four, and not have liability insurance to cover yourself? I know they do sometimes. Somebody's lapses, they're waiting for some money to come in, they take a chance. But when you run a human being down the road, if it's too, you said earlier don't always drive 3,000 miles a week. You know, guys driving 2,000 miles a week is driving 100,000 miles a year. That's a huge chance.
That's crazy. That's crazy. No, but I appreciate that. I'm gonna put that into a clip after we're done with this. You know, I'll answer. We'll get David to answer a couple more questions, and then he's got to go back to work. So let's see. But I appreciate that honesty. Thank you for that.
You're just taking a chance.
I
But
hear that.
right back
You
to that.
know,
If I pay you $50,000 a year as an employee and $50,000 as a contractor, and I decide to pay you as a contractor, I'm really only paying you. You're losing 7.65% of that 50,000. So it's like you're making 46 or 47,000 because I'm shifting my tax responsibility to you, except you just don't understand it. I don't take any taxes out, so it feels great for a while until you go do your taxes. But I guess then if you can claim per diem, maybe you make up for some of that. It's a squirrely thing there I don't like getting into.
I heard that. No, I appreciate that. You know, I think we're good. I think a lot of people got their questions answered, and I'll make clips of this to put it up. Definitely I'm gonna make a clip of what we just talked about. I'll put that portion up a little bit, and it's funny because that portion alone might perform better than the whole live interview, just because a lot of people just don't understand that. They sometimes think that they're making more money as a company driver getting a 1099, and then really they're not, because they still have to pay their taxes and this and that, and just that implication alone of you're not covered. You're not covered if you're driving down the road, which is insane, right? And so I really appreciate it. That really blew my mind. One last question. What was the question? I apologize. He said, my question, please. Christian asked something. Let me try and find this. Asar, the God, says, I just need David's contact. What's the name of the company? truckerstaxreturn.com or truckerstaxreturns.com is pinned in the live comment. So you could jump on there and you could talk to him about that. Christian, can you let me see what okay. Here's Christian's question. All right. I have a lease purchase truck with the company that I lease. My question is, should I be a LLC or S Corp? Should I pay myself as W-2 or 1099? Please explain.
Yeah. So I think my initial reaction is, like I said before, I think they should probably all be LLCs, taxes S corporations. If you're an S corporation, you have no choice but to pay yourself a paycheck and take taxes out on that. You're required to. So that concept is that if you made $70,000, you pay yourself 40 for the work you did for the company. Then the other 30 is just the profit from the company, which is not subject to the 15.3% Social Security and Medicare tax. So you're required to pay yourself and paying the Social Security for the money that you should have paid yourself for driving. And they require you to pay a reasonable wage or a reasonable salary. And so if you drive 3 days a week, you can pay yourself less if you drive 6 days a week. But you have to figure that out or have me to help you with it.
Gotcha. And I think the confusion sometimes that people have too, before I let you go, David, is some people think that should I be a LLC or should I be a S Corp? But the truth is, LLC has nothing to do with being an S Corp or C Corp, correct?
Well, you can't be an S Corp if you're not an LLC or a corporation, probably. If you're just a sole proprietor, you can't be an S Corp. So you have to start an LLC or a corporation. But let's say most attorneys are recommending start an LLC, and then you go to the IRS and say, I want to be taxed as an S Corp. Because the IRS disregards LLCs and pretends like they don't exist. The disregarded entity, you either tax a sole proprietor, partnership, S Corp, or C Corp. Which one are you? So legally, in the eyes of the state of Ohio, I'm an LLC. In the eyes of the IRS, I'm an S corporation for tax purposes. So you
Gotcha.
can be an S.
And I knew that. I just wanted to just to say it one more time so people had a now Jonathan's a little nervous now because he goes, oh crap, I work 1099 like that in Philly. So he's working right now for a company that's calling him a company driver while they're paying him 1099. He doesn't own the equipment. They're putting the fuel in, but he's getting 1099 checks. What is the recommendation? Get the heck away from the company, or tell them, hey, you could pay me 1099, but I need workers' comp as well, or what is the right answer?
Well, remember, if he gets hurt, most likely his state will pay his medical fees and all that. The fact that he's not covered won't hurt him. It'll only hurt the people who he works for. Okay. Now, as far as his taxes go, he'll pay more tax on the 1099 than the W-2. But here's the feedback I get from people. They say, yeah, but I'm really happy here. They do a 1099, they don't do a W-2. I understand I want to owe a certain amount of money in tax, and the whole ball of wax works out to my benefit. I'm happy with it. And then I say, all right, as long as you understand it. Because just because you may move companies and they may put you on a W-2, maybe they've got junk loads or how do I put this? A jerk for a dispatcher. Not there's any such thing as a jerk for a dispatcher, but they're out there. I hear. I've been around a few. And quality of life goes down just to get your taxes straightened out. Maybe you just got to ask. I know people who do that and they're just tickled pink with it, and I don't try to change them. But if he's getting burned, he needs to get out, and only he knows that. But the other
Gotcha.
great. This is just one factor that's not. He might say, I can pay the extra tax because I'm making enough extra money doing loads I like, going places I like, coming home when I like, and it works for me. That's a possibility that they could be doing that and still be happy with it.
Gotcha. But on the legal side, it is illegal for the company to do so because they are pretty much dodging as much taxes as they can.
They're shifting it. Yeah, they're shifting over to him. And here's what could happen. Let's say he didn't file taxes for 5 years. He comes to a CPA like me, explains the situation. I figure out his tax. He has a lot of money in tax. Never had one penny taken out of his paycheck. I will offer to him to ask the IRS to make a determination. Was he an employee? Was he a contractor? If you do that, the IRS will come in and look at it. And in this case, I think 100% of the time, or close to it, determine he was really an employee. And then half that Social Security Medicare tax should have been the employer's part. They might go to the employer for that and save him that money. Every time I've ever offered to do that with somebody, they've always said, no, I don't want to cause that kind of a problem. So it's even like when you don't like somebody and you feel like they burned you, you don't usually, they still won't sick the IRS on them because there's I say stigma, there's this thought process that's the worst thing you could possibly do to somebody. And they never took me up on it. I've had it happen every year or two. I have that conversation and they never do it. And that's always intrigued me, that psychology that no matter how bad I got burned, I'm still not going to put the IRS in the sky because that's over the top.
I got you. No, so overall, mother truckers, hey, if you have any questions, you guys can hit up David. Again, this ain't no sales pitch. He's just a friend that I can say knows what he's talking about. And so we just want to give you information today. I'll be putting this out in clips so that you guys could get the meat and potatoes straight up. But if we were to give the meat and potatoes in less than 1 minute, can you do that so that I could do a power clip for others when they watch this, and then I could put that. So I'll start this off. All right. So you think about that for a second. Hey, mother truckers. Right now we're here with David, 20 plus years experience as a trucker CPA. You can reach out to him, truckers at taxreturns.com if you have any questions. But we're going to go ahead and we're going to do a speed round of this, and we're going to get him to tell us what you need as an owner operator when it comes to taxes, so go.
Well, keep track of your expenses for your truck, which is probably your biggest expense sometimes. Keep track of what you pay for it, interest you pay on it, track of insurance, fuel, per diem, which are your nights out. Keep track of everything. Don't leave anything on the table. Get that to your tax preparer. Make sure they understand your industry is different. It doesn't have to be me. There's other good people out there. And make sure they understand what some of these things are. Per diem is deducted differently for a trucker than it is for me. You deduct 80%, I deduct 50%. Somebody doesn't know that, you lost. Get your taxes filed on time. March 15th for partnerships and S Corps, April 15th for 1040s and C Corps. Consider doing an S Corporation. Doesn't mean it's right for everybody. And if it's your first year, maybe you don't need to. But consider doing an S Corporation with the tax benefits that come along with that. Sit down with somebody and talk that through, maybe even after the April 15th deadline. And look for those ways to save money, but always remember tax is only one expense. and it's not the only expense. And you need to see it as part of the whole business. Don't make decisions just for taxes. Make good business decisions that improve your overall profitability, overall quality of life, help you meet your goals. And see taxes as one thing in there, and don't worry too much about it. Yet at the same time, make sure you get it done right.
I love it. That's perfect. So I'll cut that clip on there, and then I'll put that as its own separate clip. But Mother Truckers, I appreciate you so much. I thank you guys. If you guys want to contact David in the pin message up top, you can hit him up. If not, you see his name right here, David R. Dilly CPA. You can find him on LinkedIn. You can find him on Facebook. You can find him truckerstaxreturns.com. Anywhere else?
I think that covers it. Truckers Tax Returns and LinkedIn. I got about 6,000 connections on LinkedIn. Appreciate all those people. And I guess if I can say 888-260-0595 is our phone number. Our secretary's name is Ashlyn, and there's 6 of us that work here, me and my wife and 4 others. And we are really just trying to grow our business, and just like you guys, and go home at night and spend time with our families. And we like trucking, and we like helping you guys, and give us a call if you want to.
Hey, there it is. I love it. Well, no, I appreciate you. Well, we'll have you again sooner than later, especially when I have a tax question. We'll start doing segments where if there's a big tax problem, or if there's, honestly, David, if you have a customer that doesn't mind being on the show, where there's a big problem that you help them save. A lot of people sometimes they might be embarrassed about it, but we might be able to put that on and not use that customer name or anything or dates or time, but use something kind of general to what that problem was to help other people solve it as well. I think those could be cool segments.
That could be. And I gotten to know a guy locally. He's new at it, but he's got some experience too. He's a Edward Jones agent. And I've talked to him about him and I partnering up and helping people with their retirement planning in a way that saves you money on taxes. I'm just throwing that out there.
Oh, that's awesome.
You think that would help you or be beneficial to your guys? He's a little squeamish about giving too much specifics because he's in a highly regulated industry, but he can talk about things for sure in general. And if you do this, if you can do that, and situation can vary from person to person. He said, but if I can get some clients on here, I'll think about that. And I appreciate you having me on here and all this.
No, of course. And then I'll just answer this one because we know it now. As a Dead Dog Rising says, as a driver that's not an owner operator, can I still count my per diem and my personal expenses in the truck towards my W-2? Go for it.
No, because that section of the itemized deductions went out a long time ago, a few years ago. So you got to understand, do I itemize or do I not? If I do itemize, what can I deduct on their home interest, mortgage interest, property tax, state tax? Used to be there was a category on the right-hand side, 2/3 of the way down, about that wide, called employee business expenses. But that's not allowable anymore. It may come back someday, but I don't look forward to anytime soon with the political division in Washington. So if you're a W-2 employee, you can't do that.
No, that's awesome. No, thanks, brother.
And it is your company. Here's what that company's CPA should have done. You can know your drivers can no longer do this. Therefore, you pay them per diem. So what I have owner operators do, if you're a one member owner operator, you pay yourself. You say I make $1,000 a week, for example. I say, well, you really only make $650 a week. They say you're crazy. I say, no, pay yourself per diem. There's no tax on that coming out to you. You don't have to worry about deducting it later. Can I itemize or can I not? You pay yourself your per diem, say $300, and take $700 in a wage to get back to your $1,000. And at the end of the day, you'll have more money in your pocket because of the way you did the per diem. So his company needs to be paying him his per diem from them. It'll save the company money. Again, Social Security, Medicare, workers' comp, unemployment. It saves the company money. It helps the driver save money. That's how you fix that. I should have said that an hour ago at the beginning of our section when it came out the first time. That's how you fix that.
No, I appreciate it, brother. Well, I'll put those clips in there, brother. Well, no, thank you. Thanks for being on the show.
Hey, Alex, thank you so much.
Yes, sir. We'll be sending you off. We'll see you next time. We'll talk to you soon, brother.
All right. Take care. Thanks.
Yes, sir. Bye. All right, mother truckers, I appreciate you guys so much for being on the show. Thanks for watching. I'm going to put these in clips so that we could get it right. But if you have any questions, definitely hit them up, or I'll make clips of it. So, mother truckers, appreciate you so much. I'll try to get more professionals in the biz just to give you free information. That's what we do. Peace out, man. Love you all so much. And thanks for everything.